Good afternoon, everybody. Thanks for being here again. I am Bob Icino, co-founder and chief market strategist of Path Trading Partners. Mike Arnold is here as well. Since I'm the co-founder, you've probably deduced that Mike is the other co-founder. Can you have more than one No, that would be tri-founders. I don't know. So you've got me and Mike, and we're going to be talking about Nadex Binaries, Moneyness, and the Greeks. This stuff is extremely important. We're going to go into a lot of detail over the next 3 or 4 Tuesdays with this particular subject matter. And by the end of it, you're going to understand with some clarity why the Nadex binaries that you trade, demo, or live move the way that they move. So that's kind of the point. And the beginning of it is introducing the concept of moneyness and the Greeks and how they affect Nadex binaries. So before we begin, as always, we're going to start with a quick disclaimer. This presentation is for information purposes only and does not constitute investment advice, nor an offer, solicitation, or recommendation to acquire or dispose of any investment or to engage in any other transaction. This presentation is not intended for solicitation purposes, but only for use as general information. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Past performance is not indicative of future results. Real quick before I move on from this, the last part of that is really important. One of the reasons that we entered into a sort of informal partnership, we are not associated with Nadex in any official sense, but we do these webinars for them, is because they have limited risk products combined with being CFTC-regulated. That's the same regulating body that regulates the CME group, for example, NYMEX, and some of the major exchanges. So they are a safe place to limit product. So when you look at the last couple of lines of this, you should carefully consider whether such trading is suitable for you in light of your financial conditions. Our education, our training, Nadex responsible products can't control any of that, only you can. So you're not going to wake up if you trade Nadex with some sort of massive margin call. That can't happen, but you could put too much in your account and trade it irresponsibly. If you decided to be a trader, you've decided to take on a life of personal responsibility. So always keep that in mind. Who is Path Trading Partners? Well, we are a trading and education firm. And our mission was to form a trading firm, which we are, that educates, supports, and backs traders who are committed to probabilities, discipline, and long-term success. And this is achieved by following the correct path. It's not achieved by making the most money. It's achieved by following the correct path, and then money comes from that path. We are not high-frequency traders, and we are not day traders. What we are is a firm that believes in a long-term success in trading, covering timeframes dictated to us by products, markets, and price action. If you've been in our webinars before, I always focus on that last line, because we don't go into a day saying, I want to trade this for this much money at this particular time. We let the markets and the time frames where there are proper trades available, high probability trades available, we let that dictate to us what and how we're going to trade. So I mentioned Mike Arnold, who is the other co-founder of Path Trading Partners, and he's a 23+ year market veteran. He's been teaching traders online and in person for 10+ years. He is currently, and has been for a long time, a strategy and development consultant to multiple hedge funds. One of Mike's duties when he gets hedge fund clients is to break their trading models. They send him models and say, what's wrong with this? He does that for us as well. He's a former options market maker on multiple exchanges. Binary options as well as Nadex spreads are options. He traded in Chicago, New York, Switzerland, and Canada, and he's the current head of technology and trading system development for Path Trading Partners, along with being a co-founder. That's me in the corner. I've been around for about 23 years. I've been teaching traders online and live since about 2002. I've taught about 5,000 students to date. I also was a principal and a member of the investment committee and a futures and forex fund of funds. So my job was early stage managers with less than 3 years of track record, where it was my job to analyze their track record and decide if we're going to allocate money to them. I've appeared on several television interviews, several television stations. My next one is Thursday at 12 o'clock on CNBC's Futures Now. That's my next scheduled one. And to date, I've done over 700 interviews, and I continue to make media appearances 5 to 10 times per month. I'll tell you from experience that being on TV really doesn't mean you're smart. So I don't even know why I'm telling you guys that, but maybe you can decide after this if I'm smart or not. Let's go over the basics of binaries. Nadex binary options are worth either 0 or 100 upon settlement. Essentially, they are a yes or no prediction that the underlying market will close above a specific value or strike price upon a specific time, which is the expiration. For example, if the Nadex expiration value closes above 2100, which would be the strike price, at 415 today, then the Nadex binary option priced at 2100 settles at $100. However, if the Nadex expiration value is at or below 2100 at expiration, then the binary option for the greater than 2100 strike price settles at 0. So what is the Nadex expiration value? Well, the Nadex expiration value is calculated based on the following. You take the last 25 trade prices right before the expiration time of the underlying market. They remove the highest 5 prices and the lowest 5 prices to prevent any sort of price jobbing, so to speak. Call that spoofing. Take the arithmetic average of the remaining 15 prices and round to 1 decimal point past the point of precision of the underlying market, with the exception of the Wall Street 30, which is rounded to the same point as the underlying market. Now, a trader can either buy, which is going long, or sell, which is going short, a binary option. If a trader is a buyer of a Nadex binary option, then they expect the underlying to close above the strike price. If a trader is a seller of a Nadex binary option, then they expect the underlying to close at or below the strike price. It's a very important distinction from traditional options. If you're a seller, at the price also works for you, so at or below. Okay? So let's take a look at going long a binary option. On the right, a ticket is set up to go long a Nadex binary option in the US 500. The cost to place this trade is currently $47.75. That's the offer price. You can see that right here. Upon placing this trade, your account will be debited $47.75. You will see the total that was in your account diminish by $45.75 per contract. You see the size here? That's the quantity you're doing. This goes back to the original comment I made in the disclaimer that if you have more money than you can afford to lose in your account and you jack up the size, it'll be $47.75 in this particular example per contract. If the Nadex indicative index, the US 500 index, closes above 2091.8, which you can see that's the strike of this particular US 500 option, 2091.8. If the indicative US 500 index closes above 2091.8 by 1 p.m., the option has a value of 100. If the Nadex indicative US 500 index closes above 2098 at 1 p.m. expiration, the trader will receive $100 into their account. Now remember, when you first placed the trade, you paid $47.75 to initiate the account, or to initiate the trade. So if you had an account with $100 in it, okay, and you paid $47.75, you have $52.25 left in your account. Sorry about that. You can see that right here. The trader will have a profit of 100 minus $47.75, which equals $52.25. Okay, so again, if you started the trade off with $100 in your account, you place the trade, you end up with $52.25 in your account, and then when the 100 is put back in, you end up with $152.25. If the Nadex indicative US 500 closes at or below 2091.8 at 1 p.m., remember, at or below, then the trader will receive 0. The trader will have paid $47.75 per contract to initiate that trade, so the trader will have a loss of 0, which was placed back into your account, minus the $47.75, so you will have lost $47.75. It's pretty simple. Just remember, the money comes out of your account when you place the trade. So let's look at what happens going short a binary option. Here you have got a crude oil ticket, and the strike price of this is greater than $42.50. The expiration is 2:30 p.m. On the right, a ticket is set up to go short a binary option in the Nadex Indicative Crude Oil Index. The bid price is currently $30. You can see that right there. To place this trade, your account will be debited 100 minus 30, which is $70, which is the max potential loss of the trade. So in traditional options, when you sell it, you take money in. When you go short a binary option and you hit the sell button in this example, you actually get the maximum risk, the maximum loss, $70, taken out of your account. And if the Nadex Indicative Crude Oil Index closes at or below, again, also different than traditional options, at or below, 42.50 at 2:30 p.m., then the Nadex binary option has a value. So if the indicative crude oil index closes at or below 42.50 at 2:30 p.m., the option has a value of 0. The trader will have to pay out 0 since the underlying closed below the strike price. Therefore, the trader will collect the $100. So what's the result of that? The result of that is, since your account was already debited the 70, 100 is put into your account, 100 minus the 70 you were debited leaves you with $30. So if you had $100 in your account and you sold this, you would have $30 showing in your account, and then if it expired at 0, if at expiration the option was worth 0, you would get 100 placed back into your account, which would leave you with $130, just like the max profit shows on the ticket. So again, if it closes at 2:30 p.m. above 42.50, the option has a value of 0. The trader will lose the $70 that was debited in their account. That's if it settles above 42.50. Remember, Nadex debited your account the full risk of 100 minus the $30 bid price, which resulted in the initial set debit. So you end up keeping the $30 in the example of starting with 100. When you sold this, they debit the entire possible max loss, and if the indicative index closes above 42.50, so 42.51 or anywhere above that, anywhere north of that, you end up with the $70 permanently being debited from your account. Pretty simple. It's always a debit, whether you're buying or selling, is really the point of this whole thing. So let's talk about option moneyness. This is very important in the world of options. In the option world, there is a concept called moneyness. Moneyness is the relative position of the underlying price with respect to the strike price of an option. Now, since Nadex binary options are a type of option, they also have the concept of moneyness built into them. So moneyness, as applied to Nadex binary options, means the relative position of the Nadex indicative index with respect to the strike price of the Nadex binary option. So let's look at Nadex binary moneyness. There's 3 main categories of moneyness. There is out of the money, or OTM for short. There is at the money, or ATM for short. And there is in the money, or ITM for short. There's also the concept of deep in the money and deep out of the money, which are just modifiers of the in the money or out of the money concepts. We don't have to worry about those right now. Let's talk about out of the money. We refer to a Nadex binary option being out of the money if the Nadex indicative index is below the strike price of the Nadex binary option. It doesn't matter if the trader is long or short the Nadex binary option. It only matters where the indicative index is trading relative to the strike price of the binary option. These terms are important as you go forward and begin to sort of weed through strategies and decide the way that you're going to trade these things, is to know what OTM, ITM, and ATM actually means. So really your position doesn't matter for whether something is out of the money, at the money, or in the money. Keep that in mind. So let's talk about an out of the money and a long binary. Here you see a ticket for the US 500, December 2092.0, 2 p.m. Eastern expiration. If the Nadex US 500 indicative index is trading below the strike price of 2092.0, this Nadex binary option is considered out of the money. When trading out of the money Nadex binary options from the long side, the trader will have a max profit greater than the max loss. This is one of the, I don't want to call it a myth, that's not really the right word, but this is one of the assumptions that people make, is that when the risk to reward is skewed to the profit side, these are the only good trades you can take with Nadex binary options. And I specifically say Nadex on that because Nadex allows you to exit these things before expiration. So we do a whole series of webinars based on the best time to do these trades, but we'll talk about that another time. Let's look at an out of the money for the short binary. You've got a crude oil 42.20 with a 2 p.m. Eastern time expiration. If the Nadex crude oil indicative index is trading below the strike price of 42.20, then the Nadex binary option is considered out of the money. When trading out of the money Nadex binary options from the short side, max loss will be greater than the max profit. Again, doesn't necessarily mean in and of itself that this would be a bad trade, not just because it's out of the money. So again, that's for another webinar. Deep in the money, if the price of the Nadex indicative index is trading way below the strike price of the binary option, it can be referred to as deep out of the money. For example, if the US 500 indicative index trading at 2090 and the strike price is 2110, the Nadex binary option is deep out of the money. That's 20 S&P points. That's a big, big move. Let's talk about at the money. We refer to a Nadex binary option being at the money when the price of the Nadex indicative index is trading at the strike price when trading the binary option long or short. For example, if the US 500 indicative index is trading at 2150, then the 2150 strike price Nadex binary option is at the money. It's an obvious concept, right? It's right at the money. So for long or short, if the US 500 indicative index is trading at the strike price of 2089, then the Nadex binary option is considered to be at the money. The bid and offer prices will both be near 50 when a Nadex binary option is at the money. Here's an example of that, okay? 2089, you can see 54.75, 45.25. It's really tough to get a screenshot of one exactly at the money, but you can see we did it here. Nadex indicative index, 2089.00, and that's the strike price, greater than 2089.00. This is considered to be exactly at the money. That is the only example of at the money. There's some leeway in conversation. For example, if this was 2088.98 or something really close, people will still call it at the money. In conversation and discussion about options, you'll hear at the money and it'll be referring to the closest strike to the indicative index. But for now, just for the purposes of this, consider at the money to be only directly on the strike price. Let's look at in the money. We refer to a Nadex binary option being in the money when the price of the Nadex indicative index is trading above the strike price. You seeing a pattern here? Again, it doesn't matter if the trader is long or short. The Nadex binary option only matters where the Nadex indicative index is trading relative to the strike price. Here we've got an example of a long binary that's in the money. You can see the indicative index is at 4204. This is a greater than 4180 with a 2 p.m. Eastern expiration. So this particular option is considered in the money. When trading in the money Nadex binary options from the long side, the max loss will be greater than the max profit. This is going to be much easier to understand why as we get into the other webinars in the coming weeks as to why these particular, the scales are tilted in one direction or the other. It'll be really, really easy to understand if you don't understand it now. Let's look at an in-the-money short binary. The Nadex indicative US 500 index is trading above the strike price of 2087.50, so this Nadex binary option is considered to be in the money. Greater than 2087.50, the 2 p.m. Eastern expiration, and you've got 20, 90, 50. So this is in the money. When trading in the money, Nadex Binary Options, from the short side, the trader will have a max profit greater than the max loss. There you go, 1850, 8150. Again, simply because the profit is so much greater than the loss, that in and of itself does not necessarily make this a good trade. There's a lot more that goes into the pricing. Deep in the money really quick, if a price of the Nadex indicative index is trading way above the strike price of a Nadex binary option, it can be referred to as deep in the money. This is a very much theater of the obvious, right? For example, if the Nadex 500, US 500 indicative index is trading at 2,000 and the strike price is 1940.0, then it's deep in the money. It obviously means it's way in the money. This again is an example. 60 S&P points is a very large move. This is a very deep in the money Nadex binary option. I'm going to turn it over to Mike for the rest of this. You guys can hear his lovely voice. All the positivity is going to come out of the room.
Oh, come on.
I'm just saying.
Oh, brother. I'll give you my Gaussian models that you can go work on now since you're done. Okay, everyone.
I muted myself when you talked.
You already muted yourself, see, Mr. Positive.
Gaussian mod, I don't even know what you're talking about.
All right, everybody. Thanks for being here. Bob covered the introduction to binaries, and moneyness is important, so I'm just going to go over why it's a little more important. Covered this for two main reasons. First, enables us to discuss Nadex binary options using the correct terminology and traders knowing which options we are referring to. As long as we can say it's in the money, it's out of the money, or it's at the money, everybody can know what we're referring to. That's beneficial as we can carry on a normal conversation. Second, in the next class, we're going to look at the concept of the Greeks and how they affect the options that are out of the money, in the money, and at the money. And you're going to want to know things like what's the delta when it's at the money? What's the delta? How does the delta of the option and the delta of the option, I'll give you a little preview in the next couple slides, but that's the rate of change of the option price related to the rate of the change of the underlying. So we can say, well, when this is in the money, the delta looks like this and the curve acts like this. You know, the rate of change of the delta is this. When it's at the money, it's this, or the theta, which is the time decay of the option. When it's out of the money, you have this kind of theta. When it's in the money, you have this kind of theta. And that's why it's so important. So this is a quick graph of a binary price versus the underlying price with 30 minutes to go and the specific implied volatility. In the option pricing model, whether it's standard options, whether it's binary options, whether it's you're building the Nadex spreads, they're all based off option models. All right. And inputs to option models, a little preview of what's coming in the future. You have some parameters. You have the underlying price, which is why it's on the graph down here, because every time the underlying price changes, naturally the price of the binary or the theoretical price of the binary is going to change. Another input into the pricing model is the time to expiration. You will always have an input of the time to expiration. Every moment that changes your time to expiration, thereby changes the theoretical price of the binary option. You also have something that's not listed on this slide, but it's an input into the pricing model, which is the implied volatility. Implied volatility is generally based on the volatility of the underlying, but can also be based off of future expectations of the volatility underlying, meaning the underlying may not be very volatile now. Volatility is you can think of it as the price movement. You know, in quiet markets, you know, maybe lunchtime or after hours trading in currencies, you know, during the Asian session when sometimes they're not trading much, that's low volatility conditions. Higher volatility conditions could be currency European Open, especially the Euro US dollar, or maybe the US 500 based on the S&P 500 E-mini right around our mark, or right around when the future contract opens for, you know, the cash trading. So that's when you might experience high volatility. What implied volatility is if let's say it's really busy now, but we expect the volatility, the markets to get really quiet because of major reports coming out or Fed's going to announce something, that's, if I'm the option market maker using my option pricing model and I expect volatility to go down, yet it hasn't yet, I can change the implied volatility in the pricing model based off my future expectations, and that will change the theoretical price, which the bid offer is based on. Now, graphically, so we have the curve, and this is 30 minutes to go. If this now dropped to 29 minutes, this curve would slightly shift. 28 minutes, it would shift again. If the implied volatility changed, this curve would slightly shift. But the rough shape will remain the same and get more extreme over time. Remember, when this expires, when this says 0, anything above 2010, if I'm long, well, the option doesn't matter if I'm long or short, but the option therefore is worth $100. All right, if I was long it, you know, I'd get that $100 minus what I paid for it. So it really doesn't matter my position. In the money is 100 at the end, which is right here, and out of the money is 0. At the money is also 0. So if the indicative index is calculated on expiration, ends right at the money, it falls into the out of the money category, and the option is worth 0, regardless of your position. So as you see, this curve is going to change, and this part's going to fall down, this part's going to rise up as it gets closer and closer to expiration. One of the things people get confused about, and I just want to clarify this, because I've been talking to a few people about binary options, they say, well, shouldn't in the money and out of the money depend on if I'm long or short? No, because you're not, when you go short a Nadex binary, you're still going short the same binary. You're not, if we can say this is technically a binary call option or a digital call option. That's another name for these things, which in the money, based off of Nadex, they're settled at 100. Out of the money, they settle at 0. As long as it settles at 100, it's considered in the money. If it settles at 0, it's out of the money. It does not matter what your position is. So even though if you go short this option, you want it to settle out of the money, because then you get to, you know, keep the profits. It's not in the money if it's down here for you. Yes, you want it to be down here, but the option is still considered out of the money. That's one of the things I just want to clarify. It does not flip based off your position. We're always talking about the same option, that I could be going long, you could be going short, or I could be going short, you could be going long. We're not trading two different instruments. We're trading one instrument. So, just to clarify that. What I alluded to was the price changes. And this gets into what we'll start covering in the next sessions with the delta. One of the ways to look at this, though, let's just take a look at different points of this curve, again, with an implied volatility that goes into this and a time, which is 30 minutes to go. When the Nadex indicative index is 2007, the 2010 strike price, we're always looking at the 2010 strike price or the 2010 strike price, it's going to be worth something. We go up and then we cut over. So it's going to be worth about the $20 given this amount of time to expiration and this implied volatility. Now, if it goes up to 2010, the binary option is going to be worth $50. You can come up to here on the curve and go over. That's your theoretical value that the bid and offer are going to be on either side of. So we can see then if we go up to 2015, meaning when I say the underlying or the indicative index goes up to 2015, we go up here on the curve and it's worth about $88. Theoretically, bid and offer are going to be on either side. Well, let's take a look at does this really move linearly? Because a lot of people when they're first getting into things think these things start moving in a linear fashion, which they do not. As you could see from the curve of this, it is not a linear curve. It is not a straight line. If this was a straight line, it would move in a linear fashion. But it does not. There's a curve to this. That's due to the delta of the binary option. So, as the native index moves from 2007 to 2010, the binary option moves from 20 to 50, the theoretical value, okay, with 30 minutes to expiration. The indicative index has moved 3 points. It's gone up from 2007 to 2010, and the binary option has increased by a value of 30. So you can say, well, look, boy, if you just assumed it went linearly, it would be moving 3 points. That's about $10 a point. Well, let's see if that holds true. Let's compare it going 2010 to 2015. So moving 2010 to 2015, the option moves from 50 to 88 with the 30 minutes to go and a specific implied volatility, and we're assuming the implied volatility is not changing, and we're assuming this happens instantly and the time didn't change. The native indicative index would have moved 5 points and the binary increased by a value of 38. Well, if you divide 5 into 38, it's not this. Remember, you divided 3 points in the 30, that gave 10, so it was roughly 10 a point. Well, if this held true for 10 a point, it should have moved 5 points, the option would have increased 50. It did not. It only went 38, which is just over 7 points. You know, $7 per point. So you can see it clearly does not move in a linear fashion. Yeah, why is that? It's the delta. The delta changes, okay, depending on where the indicative index or / the underlying is trading. And then you have, we'll get into this in the future, the gamma is the rate of change of the delta. These things also have time decay. As I referenced, if it just sits here, if the indicative index / underlying sits here at 2009 and I'm along this 2010, this curve will move down as time approaches expiration. Okay, and if it does not get above that 2010 strike price, this will be worth 0. That's a concept called theta, or time decay. Conversely, if it's trading at 2012 and I'm long this and it stays at 2010, above 2010, this will eventually be worth the full $100. That also is time decay, but it's working for me if I'm long. It would be working against me up here if I was short, but it's working for me if I am long. So, as you may gather from the prior slide, a Nadex binary option does not have a linear price change. For example, a $1 change in the underlying does not always equal a $10 change in the value of Nadex binary. This is due to Nadex binary options and can be modeled through a concept called delta, which I alluded to. In the next class, we'll be really going into this concept of delta. We'll be looking how the delta changes with time, how the delta changes with the implied volatility, okay? How the gamma, which is, that models how the delta, if you say the delta is like the speed or the speedometer in the car, the gamma would be like the acceleration that changes the speed. So if you're accelerating from 50 to 60 miles per hour, the car's going to accelerate at a different rate than if you were accelerating 0 to 10 miles per hour. You know, there's different accelerations depending on the speed of the car. That's the concept of gamma that we're going to get into. So just a preview so you guys can start thinking about this and really get down the concept of out of the money, at the money, and in the money. So in conclusion, we reviewed the basics of the Nadex binary options. We examined the concept of moneyness and how it applies to Nadex binary options. We looked at the concepts of out of the money, at the money, and in the money. Finally, we took a quick look at how price changes with Nadex binary options are not linear. This information was necessary to provide a solid foundation from which to explore the concept of the Greeks and how they apply to Nadex binary options. Let me turn this back over to Bob real quick, and he can wrap this up, then we'll look to take any questions that anybody has. Bob, are you there? Maybe not. Well, or maybe you're still muted, or maybe you're just silent.
I was still muted. I'm sorry. I've been talking and talking and talking.
You've been talking?
I read the whole conclusion slide. Can you guys hear me okay?
I can hear you.
Okay.
Sorry, I went back on mute so we wouldn't be talking over each other, but then I responded to you and I was on mute.
That's okay. You guys can read this now, right? Follow us on Twitter at Pat Trading. Like us on Facebook if you could. Visit us at pattradingpartners.com. Love for you guys to, there's a ton of free stuff on our website. There's some webinars that link to the old Nadex stuff we've done, but if you want to check out the stuff on Nadex's website, just go to the webinars tab, look under archived, and you'll see a bunch of our stuff. If you're interested in what we're doing going forward, we'll be here every Tuesday at the same time through May. And we're going to go into a lot of the stuff that Mike and I talked about into where this stuff actually applies to your trading. So happy to take any questions at this point, or we're happy to let you guys go and enjoy your dinner, depending on where you're at. So we'll wait for a few minutes. Otherwise, we'll let you guys go. I'm not seeing any questions pop up, so thanks again to Nadex as always.
That's how good you are, Bob, with your foundation.
I was very hopped up on espresso today, so it was very.
I think we talked very fast.
Who,
today.
I talked fast?
I think I did too.
It's okay. As long as everybody's happy. So, all right, guys, if you want to, support at Pat Trading Partners. If we're ending this before you got your questions answered, you can send them to us, or you can always send them to Nadex and they can forward them to us. And thanks again for being here, guys. Same time next Tuesday, we'll continue on this subject. Cheers, everybody. Thanks, Mikey.